China's COVID-0 policy is taking a heavy toll on its economy, with industrial output and consumer spending sliding to the worst levels since the pandemic began. Officials, however, remain optimistic about a speedy recovery. Chloe Feng reports.
As China remains determined to achieve dynamic zero COVID, its economy is paying the price. Consumer spending and industrial output last month plummeted to their lowest levels in over 2 years. In its regular briefing, the National Bureau of Statistics reported that retail sales plunged 11.1% year-on-year in April, the second consecutive month of decline. Industrial output unexpectedly fell by 2.9% year-on-year, while the unemployment rate edged up 0.3 of a percentage point. The only positive area was fixed asset investment, which saw an increase of 6.8% in the first 4 months of this year. But that was still lower than an expected 7% rise. Officials attributed the downward trend to an increasingly complex and grim international environment. A domestic COVID spike in March and April also sent dozens of cities, most notably Shanghai, into lockdowns, dampening spending while disrupting supply chains. But the Bureau remains bullish on China's high-quality development, insisting the negative impact will only be temporary.
With the phased result of epidemic prevention and control achieved, the policies and measures to stabilize the economy continue to take effect, and a gradual recovery of economic operation is in anticipation.
Financial authorities only announced yesterday that banks are allowed to further reduce mortgage interest rates for first-time home buyers. But many analysts describe the push to prop up the housing market as underwhelming. Chloe Feng, HKIBC.